Hello traders, the title of the video is Stock a Technical Trader explains the power of a cycle point in the financial market. What is a cycle point? Alright, and how one can use the cycle point in the financial market. Alright, before you run away and say that, alright, Joe, you talked about it before, I know all about the cycle point, understand what is a cycle point. I encourage you, alright, to stay with us as we continue, this discussion. Alright, so the cycle point is when the price goes up, goes up from point A, it rises from point A, and then as it was going up, it turn around and return back to the point A again. So normally the price will go up from point A to point B, but when we are talking about a cycle point, the price rises from point A, went up, and then it return back to the point A again, the same point, forming what we call a cycle point. So a lot of traders that have been following us say, George, I already know this, which is good. So another cycle point is when the price starts declining, so the price going down, alright? So but it turn around and return back again to the point A. So it start declining from point A and it return back again to the point A. This is another, cycle point. So very often when a price exhibits a cycle point, professional will measure the depth of that round chart pattern. So this is a round top, this is a round bottom chart pattern. Alright, trader will measure the height of that round chart pattern. Alright, and they will project it in this case below the neckline. Alright, and in this case they will project it above the neckline. But by doing so, here I want to use a conservative measurement. Alright, as they do so, they will set a target, so the ultimate target after that cycle point for this stock is somewhere, I'll put it a bit below, somewhere in the zone of I can't see properly, in the zone, call it in the zone of $63, because if I put the line up, I can't see it. Are you with me? We'll be in the zone of 63, that will be the ultimate target level. But as the professionals set the ultimate target, they will also set a midpoint target. Very often, what usually takes place, the primary breaks above the cycle point and find a support. You can see here, this tall candlestick bar pushed through that cycle point. And the second candlestick bar, this one here, the hammer with the tail, will try to retest the cycle point, which means price breaks above a retest or price form a higher low above the cycle point. I need to remind traders that a higher low or a bullish chart pattern above a cycle point is a high probability bullish trading setup, and a bearish chart pattern, or a bearish trading setup below a cycle point is also a high probability trading setup in this case here. So in this case, if you have a bearish chart pattern or a bearish trading setup below this cycle point, that will constitute a high probability a bearish trading setup. As the professional set a target, what usually takes place, a lot of traders forget about the midpoint target. I want to stress on the importance of the midpoint of a cycle point. So whenever you see a cycle point and you set your ultimate target, remember that the midpoint target is a very, very important a target level, because very often what we see, the price may find a support above the cycle point, but as it's going up, the market very often, not always, very often, will acknowledge the cycle point. And sometimes the price will acknowledge, the price will acknowledge the midpoint target. This is the midpoint target here. And sometimes the price will consolidate between the cycle point and the midpoint target before breaking above it. This is the situation for this stock here. Bit a difficult name. All right, this is Earcapped Holdings, Epic AER. So as you can see here, the bullish traders, why this candlestick bar is long? Try to think of it. Why this candlestick bar is so long? Look at the price structure. Look at the price structure here. The price structure here is 1, 2, all right, 3, yes or no? So the reason why the bullish traders were very, very careful to push it through this mount, they don't want it to stop here, because if the price did stop here, if that long candlestick bar did stop here, some trader will come and try to sell here. Why? Because the minimum price move is free. We draw the line. We say priority to bearish signal below and priority to bullish signal above. So the bullish trader, professional bullish trader, do not want to delay this price action. They push it through that media line to indicate. So in fact, probably some aggressive trader that place order here to sell, expecting minimum price move with free price, possible reversal here. They kick them out of their trade, and also to signal to those who are trying to sell that do not try to sell this stock. All right, we want it to go up. You see, that's why they push it through to avoid delaying that bullish progression. And as the price breaks above that cycle point, you see that pullback here. That's the invitation to buy. Trader will implement a top-down trading method, okay, to trading. And the next target is the midpoint target, which is a very, very important target level when we are using the cycle point. So whenever you see a cycle point and the price goes above or below the cycle point, be careful, watch the midpoint target level. So for this stock here, as you can see, as the price you see went to the midpoint target, acknowledge it, pull back, form a higher low, it try again one more time. All right, this is what we call the duel or the fight between the bulls and the bear, because the bulls, as you can see here, they see that they push it through. You see how the bullish trader push it through here. Bearish traders knew what they are trying to do. They want to run away with it, so to speak, as we see very often. If you watch rugby games, all right, you catch the ball, you run away with it. They wait for them. They wait for those bullish traders at the midpoint target, because they understand that some of those bullish traders will be happy to cash some of, to take some profit at a midpoint target. So in those bearish traders that were kicked out of the trade here, or those who did not take part into it here, will try to sell again at a midpoint target, knowing that the bullish traders, some of them will try again to take profit at a midpoint target. Very often, all right, the smart money, as the price break above the cycle point, if it run to the midpoint target, they will take some profit. All right, so this is what's happening here. As you can see, the price is consolidating between the level of $47.75, which is the midpoint target, and the level of $32.96, which is the cycle point. So now you can see carefully, it breaks above that midpoint target, is retesting it here, but it's not yet ready. So this is one thing you need to watch out for if you are using breakable and retest. Why this one is not yet ready? Because that candlestick bar on the monthly chart, is not yet closed. It will be closed at the end of August 2017, which will be the 31st of August 2017. So those are the few things I want to highlight today. So when you are using the cycle point, highlight the midpoint target, highlight the ultimate target level. Know that the midpoint target is a very important key level, that very often the professional will take profit at the midpoint target after the price breaks above, okay, the cycle point. A higher low or a bullish chart pattern above a cycle point is a high probability trading setup, but as the price going up, the professional will be prepared to take some profit at the midpoint targets. The price breaks below the cycle point, and we see, okay, a bearish chart pattern or a high probability bearish trading setup, we will take it and trade it like a pro using a top-down trading method. As the price is going down, all right, we want to watch, okay, the midpoint targets. All right, so this is what's happening here. You want to understand it, and why also this candlestick bar push it through is because the bullish trader were trying to run away with it to avoid that sellers, okay, come here and start selling one more time. All right. So watch out for the candlestick pattern in the vicinity of the midpoint target. Look for trading setup in the vicinity of midpoint target. Or if you buy above the cycle point, be prepared to secure your gain at the midpoint target, or all right, or cash out completely at the midpoint target. All right. So this is what's happening here right now. Talking about the AER yield capped, okay, holdings belonging to the industrial sector. As always, my friend, if you have any question or suggestion, all right, put it in the comment section, and in due course, I will be recording another video to answer your specific question. If you find the video truly useful, all right, give us a signal by giving us the thumbs up. If you think that, Joe, you have not done a good job this time, all right, please let us know by giving us the thumbs down. That will put us under pressure to work harder for you. If you think that this is an essential technical trading video, feel free to share it with your friend on Google+, on Twitter, and also on Facebook. As always, when we identify a trading setup, we must implement the trading drill, the setup, the signal, and the low-risk entry point using a valid, a top-down or multiple time frame trading method without ignoring the economy news and the fundamental, especially when we are swing trading or position trading. Very, very important. So this will conclude our discussion today about the stock technical trader explains the power of a cycle point in the financial market. Happy trading to you all, and speak to you soon. We are the TSTW24 traders talking about stock technical trader explain the power of a cycle point in the financial markets.